Just wondering what you make of the state of our economy at the moment. You've got the budget, which is around the corner. Our share market is is at the high that we saw at February last year, all in a pretty good position. And now we see this morning that the finance minister saying that job seeker has come way off what's required to have been spent. So we're in pretty good shape.
We are in good shape. And look, the way to look at the economy in answer to your question is that, yes, we are at above the optimistic expectations from this time last year, and we are still above the optimistic expectations from economists that were done at December, so basically just after MYEFO last year. So we are doing very, very well. There's no doubt about that. We have had an incredible boost from particularly commodities. I can't not point to copper at the moment. People forget that we are one of the largest exporters of copper out there, and at $10,090 a tonne on the London Metals Exchange, and around about $4.50 a pound on the Chicago Metals Exchange. That is around about either $90 for the London one and around about sort of 30 cents for the one over in the US, from record all-time highs in copper prices, which happened back in 2011. We know that at the moment, iron ore is at a record all-time high. So getting to your question, we've got incredible value from our exports. We have a recovery in employment that certainly wasn't expected to be at 5.6% unemployment rate is certainly much, much better than where we were. And then if you look at things like what we call the Purchasing Managers Index, so manufacturing and services, they are picking up very, very strongly. There are caveats to what I'm saying. We are still not at a level that's seeing wage growth. We're still not at a level that really would be suggested as sustainable. This is certainly coming from a very low base and we're jumping up, and that's really good to see. What is the future sustainability of that? And that's the question for the budget next Tuesday, is how do we make these movements, this return to employment, this very big boost that we've had, actually a sustainable growth rather than actually some form of cyclicality that we've got from coming off the biggest crisis that the world's seen in over 100 years.
And what's your take, Evan, on the banks this week? You had Westpac posting huge numbers, ANZ the same. I'm sure the same is going to be for NAB when it posts its numbers today as well. So it could be a good day for, well, it has been a good week for banking investors.
Yeah, to a point. I'll put a caveat to that. The reason those numbers look so incredibly large to the headline figures, as we refer to them, is because this time last year, the banks were pretty much sort of putting out the sandbags, shall we say, to sort of safeguard them from what was a very, very big unknown event. So they had what we call provisioned for an absolute crisis with regards to defaults and deferments, having the possibility that the housing market could crash up to sort of 32%. If you remember the absolute scorched earth scenario from CBA at one point this time last year. What they have done is they've released all that. So all of that provisioning, all of that money that was sitting on the sidelines has been released back out. So that big number that you saw, that 2.9 billion from ANZ yesterday and the 3.1 billion on Monday from Westpac, and likely to be, as you said, something very similar from NAB in around about 15 minutes' time, is actually a little bit, in my view, a false number, because it's just the release of those numbers. If you look at ANZ, they actually were growing below trend. They're below markets with their numbers yesterday. Housing growth has obviously been astounding, but they haven't captured that in their lending. If you look at their net interest margins, which is basically the profit they make, the growth profit they make, that was at 1.63%, and that's also below trend. So it's a very tricky place. I mean, if you look at the banks, they've had an incredible 6 months, and they are back towards levels they were this time last year. So yes, those headline numbers are amazing, but if you actually look at them on what we call a like-for-like basis and a normal operation basis, ANZ was actually, in my view, was actually soft, and Westpac was in line, and I would expect, therefore, NAB to do something similar. So whether or not they can give you that next kick up is a big question, because once they go come dividend in around about 2 weeks' time, that's when you'll get to understand what they are really at.
Okay, there you go. Evan Lucas, appreciate it. Talk to you soon.
Thanks, guys.